Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so we have very exciting data to share with you, a whole bunch of slides again. This is the annual sales report, but this is June. We have all the June data. It just came out. A bunch of articles came out about it. Now we did the May report, and May report was the first time home prices ever in the US median broke 400,000. It was like 406,000. So we're going to go through these and talk about them and what they mean. And then we're going to talk about, now this is US national data. This is not Las Vegas. This is generic trends in the US. And then we're going to talk about how current things happening could potentially affect the future and what trends we see happening. Okay, first slide. Existing home sales declined for the 5th straight month to a seasonally adjusted rate of 5.12 million. Sales were down 5.4% from May and 14.2% from a year ago. So sales are down 5.4%, which happens pretty much every year, month over month. Yep. But they are down from 2021. However, 2021 was literally the hottest year real estate's ever seen, right?
Yes.
2021 was not like a normal market.
No.
And then
we haven't had anything normal in 2 years, guys.
Yeah. So being down 14%, well, a lot of you are like, oh, that's the crash. It's crashing finally, right? Not necessarily, because remember, we're comparing from a hot thing. So down 14% is actually not terrible.
Especially when you compare it now to 2019, 2018, it's normal.
It's normal.
Not even normal. It's still hotter than it was.
Okay, here's the magic thing. We're going to let you all put in your comments really quick. What do you think the median average home sale price was in June 2022? I'll give you a hint. In May, it was 406,000. That was the median. Did it go up? Did it stay the same? Did it go down? What's the median? How did it go up by, a couple thousand? So really quick in the comments, put what you think the thing was. While you're doing that and you're down there, like the video, share it, and hit the notification bell and subscribe to the channel. So Oana, what do you think, just anecdotally from what's been going on?
Well, I'm just going to cut the chase. I think it went up.
You think it went up?
I think it went up. And I know there are lots of people out there who are like, well, but the sky is falling. And, the sky might be falling in your market, and I'm not disputing that. But overall, for the U.S., I think it went up. Okay,
so the people predict that the home crashers who are predicting the market's crashing, they're right. The median existing home sales price climbed 13.4% from a year ago to 416, a new record high. It crashed through the ceiling of the previous high, crashed up through it to a new high of $416,000, crashing, breaking the glass ceiling. That is crazy. It went up 10 grand in a month.
Okay, so you're really enjoying trolling these people.
I'm enjoying trolling the people because it's crashing. Look, we don't know, right? We've got other charts that we're going to show you and be like, hey, wait a minute, this is pretty cool. There's some very cool data out there that we're going to do a whole video on this. We're going to talk about. We have a 10-year trend video that's going to blow your mind. We're not going to do that today. So make sure you subscribe to the channel so you can see that. Does this surprise you though, honestly, that it went up $10,000 median in a month?
Honestly, it surprises me because the market, has already slowed down. So I expected the slowdown to reflect in either a more tame increase or a lack of increase. So the increase surprised me.
Okay. Slow down is just the velocity of sales decreasing. Correct. So instead of being 30% more sales than normal, we have 23% more sales than a normal market. Well, so the velocity is decreasing. So we have less sales, but it's still more than like what you would have saw in 2014, 15, 16, 17, 18, 19. Right.
The other reason why it surprised me is because there is so much negative information out there as far as the real estate market's concerned, and there's so much fear. I mean, the fear is just palpable at times, and it just seems like there's just a lot of fear being generated by people who sell fear rather than giving accurate observations and accurate information. And I think that's a disservice to all of us.
I agree. Oana, what is the normal number of months in the U.S. of inventory? Meaning, how many months of inventory do we generally carry?
We generally have about 6 months.
We generally have 6 months. Okay. The inventory of unsold existing homes rose to 1.26 million by the end of June, or the equivalent of 3 months at the current monthly sales pace. So what that means is if no new listings hit the market, we would sell the existing inventory of homes in 3 months and have no homes available on the market. That's still, even though it's rising, it's still, so we've got this baseline number and we're rising toward it. So what we track here and what we've been tracking basically since 2009, if you can believe it, 13 years, is we track normal markets and how the current market is performing compared to that in both Las Vegas and nationally. So this is national information. It'll be interesting to see July, August, September, October, when normally we have more inventory and what happens.
And you know, more inventory is good. It makes the market more stable, and most of us like stability in our lives. And the other thing is, of course, it gives buyers some choices and some breathing rooms. You know, that they're not in, buyers are no longer in this position where they have to offer, you know, their firstborn and a kidney to throw in there in order to get a house. I mean, it's been that way for a long time. And having any sort of normalcy come back to market, I think, is good for everybody concerned.
The median existing home price for all housing types in June was $416,000, up from 13% from June 2021. A year ago, it was $366,900, as prices increased in all regions. So every region of the U.S. saw price increases. This is 124 consecutive months of year-over-year increases, the longest running streak on record. 124 consecutive months, 10 years. It's year over year. Now, it's year over year because it's January, February, March. If we didn't do if we just went month to month, we would never have a record, because literally every year prices go up, and then in April, May, and guess what home prices start doing? They start ticking down. June, July, August, September, October, November, December, and then what happens? They start going up again. I've got a really cool chart. I don't have it here. I'll make another video and we'll just talk about this chart. But it basically is this little sine wave, but it's slowly moving up to the right, and it's just kind of going up and down. But it's every year the sales cycle. So we're in the sales cycle where home prices start to decline slightly into the fall, and then they start going up again next year. And we know that home prices are going to tick down over the next few months. But what we don't know is if they will tick back up again in the next spring, and if they do, what that looks like. Right. In order for you to find out, though, you're going to have to subscribe to the channel.
That's right, and hit the notification bell.
To get and watch every video we do, so you be the smartest. When you go to parties and stuff, you'll be like, oh, you'll start telling people stuff about the real estate market. And they'll be like, oh, do you guys talk about houses? Because Todd wanted to talk about that like yesterday on the video that just came out. Okay, here's the fascinating thing. Okay, Oana. We've got more slides, so don't leave yet. Okay. The conventional wisdom is there's more properties coming on the market, which there are. So time on market's going to be even longer, and prices are going to start falling because of that. So would you guess the total number of, from May to June, just 1 month, the total number of median days on market were the same, were more, homes were on the market more, or was less? What would you guess?
Well, using the information that you just gave us, it would make sense that we would have an increase in days on market. Increase in days on market.
Okay, are you guys ready for this? Properties typically remain on the market for 14 days in June, down from 16 days in May and 17 days in June of 2021.
Okay.
So the 14 days on market are the fewest since NAR began tracking it in May of 2011.
That's crazy.
Yes, it's crazy. The 88% of homes sold in June 2022 were on the market for less than a month. So half of the properties in June, this is just last month, okay, were on the market. Half the properties were on the market for 14 days and 88% less than a month. That does not sound like a crashing market.
That does not compute.
That does not compute. This is why we look at data here. And we're not just cheerleaders. You know, we get the people who comment, and we read all the comments about how terrible we are, and we're clowns, and all this other stuff. But we're not making this up. This is NAR data. These are you can go find all this online. This is actual data. We're as perplexed sometimes as you are to why things are happening and things are not happening. If you just watched our previous video, which was the international market video, you will learn that the U.S. still has some of the cheapest real estate on the planet. And I think the world recognizes this. I think Americans are recognizing this. And I think this is the reason why, as the economy grows and more wealth is created, that this wealth is continuing to move into real estate and grow, and real estate is continuing to grow.
Agreed.
Okay, but that is surprising. You thought that was going to be higher.
Yeah, I did.
Now, this is what's going to happen, everybody. You mark my words. This is going to go from 14 to like 17, 18, 20, and people are going to go, that's the crash. The number of days on the market increased by 10% because they went from 14 days to 16 days. But 16 is still ridiculous because normally the median is like months.
Right.
It's like a few months. And we're talking about, so this is where the thing where they say it went up 200% because in 6 months it could be 28 days, could be the median. But that's still historically ridiculously low.
Right.
This is why you have to be careful when you see the numbers that talk about their percentage changes because they're usually just clickbait. And we would never do clickbait.
We would never do that.
Never, ever do clickbait. And I want to challenge you. If you think we are doing clickbait on a video, I want you to go back and watch the whole video again and then put in the comment that you thought this video was clickbait and watch all the videos that you think are clickbait, every single one of them. Don't skip any of the ads either, okay? Finally, there are more homes on the market, Yun added, right?
Right.
There are more homes on the market. Interestingly, though, Yun was the economist that was quoted in the article. The record low pace of days on the market implies a fuzzier picture on home prices. Homes priced right are selling very quickly, but homes priced too high are deterring prospective buyers. So remember, all other things are not being held equal here. We do have more homes coming on the market, but they're still selling relatively quickly.
Right, and then homes where people are just saying, hey, if I get my happy number, I'll sell. If I don't get my happy number, I won't. Sometimes they don't get their happy number and those homes don't sell.
Okay. Having been a very competitive market, would you guess that the number of first-time home buyers rose year over year? Would they were the same year over year or less year over year, given that interest rates are higher? Because remember, interest rates did not just this month but get higher. We've been talking about this now for 6 months, how interest rates have been going up.
Right.
So would you guess that the number of first-time home buyers are more, the same, or less?
Probably a little more.
Probably a little more?
I think that they're just getting concerned that they're going to get priced out.
Okay. First-time home buyers were responsible of 30% sales in June, up from 27% in May. So it was up from a year ago, and it was basically the same. It was down 1% from June of 2021. But it was up from May. So more first-time home buyers were purchasing in June. It is also possible that investors backed out a little bit, right? And it's also possible that people selling and buying another house at the same time. We already talked about this. Those people are like, I don't want to give up my 2.5% interest rate to go buy a new house.
Right.
So naturally, a higher percentage would be first-time home buyers. We're going to track this because remember, this we can do every month. We do this video every month.
Right. So I think it bears repeating what you just said, that first-time buyers, they're not selling a house, or they're not losing a lower interest rate mortgage. So whatever interest rate they're getting now, they're viewing that as lower than possibly what they're going to get in a few months, as opposed to somebody who's selling a house and they have a lower interest rate and they will absolutely go into a higher interest rate if they purchase now. Yes.
The other thing too is that while there is talk of a Fed rate 0.75, a lot of that's priced in. Because remember, interest rates have gone up 3%, but the Fed hasn't had 3% of raises. They've had about 1.5% of raises. So the mortgage market has priced in these interest rate hikes that anticipating what the Fed will do. Because the Fed said 6 months ago, their plan for fighting inflation. So the mortgage market basically took off and fixed and adjusted right away.
It did, yeah.
So that's why we've seen it bounce around. It went to 5.8, it went down to 5.3, it went back up to 5.8. It's kind of bouncing around, okay?
Right, so when the Fed raises the rates, it's not if, it's when, mortgage rates will go up. But I don't think that they're going to go up one for one, is what I'm getting at, because to your point, a lot of this has already been baked into the market.
The other thing too is that people are going ahead and getting the home. They're taking the interest rate because they know that when the economy starts to cool, and if we go into a recession and inflation is under control, the Fed's going to start dropping rates, money's going to start flowing, banks will start loaning money at cheaper rates, and people will be able to refi. Right.
Well, and then the other thing is people have choices as far as mortgage products, right? So if you're purchasing a house now, you might consider getting a 7-year ARM. And that means that you've got a fixed interest rate for 7 years.
A lower interest rate than you currently have.
Right, a lower interest rate than you could get if you got a fixed interest rate. So a lower interest rate for a few years, and that buys you time to either refinance when rates go down, or you may not even be in the house in 7 years, and you will have sold a house. So that is a helpful way to deal with the situation of interest rates.
There was a guy that wrote a thing back in about 20 years ago that literally said that the perfect mortgage for the average home buyer was a 7-1 ARM. Like that was the lowest rate and the least risk for some, because these people go, oh, I've got this 30-year fixed rate and it's, we'll talk 20 years ago, 6%, right? But the problem is they sold the house in 7 years. Oh, hey, I'm now moving, or people don't live in homes for 30 years. So the super risk averse people have not been doing themselves a favor by getting 30-year mortgages if they're planning on selling the house, right? If they are, unless it's there, we're never moving.
Right.
Okay.
And there are the people who are never moving. And the other interesting thing is that Americans are staying in their homes longer and longer. The last statistic I saw was almost 11 years.
11 years. It was 7 years back in 2005. So in the last 17 years, it's gone up. Here's another interesting thing. All cash sales, they're still 25%. It was the same in May. They were 25% up from 23% in June of 2021. Two things happening. Home prices are more, which you would think more people would need to finance, but then interest rates are higher. So now you have people going, oh, I don't want to maybe buy a house because interest rates are high. So the cash buyers are out there going, great, that's just more houses for us. So it's like canceling each other out.
It is. And think about it. If you're purchasing a home and you're purchasing a cash versus getting a loan at 5.5%, that's like getting 5.5% on your money plus some, because you're not paying interest on 5.5% earnings on your money. So it's actually not a bad rate of return, considering that the stock market's not doing the best right now.
Right. Okay. Oana, what do you foresee for the rest of the year with regards to inventory, prices, and the time on the market, and then talk about how this compares to normal every year, like cyclical trends that we see throughout the year?
Well, I see time on the market lengthening.
Okay. Because this is the lowest it's ever been, so it's probably not going to get less.
Right.
Okay.
So I think time on the market's going to lengthen.
Okay.
I think prices are going to stabilize and maybe have a slight pullback. I'm not expecting a whole lot.
Right.
But again, that pullback is not from the prices in 2015, guys. This pullback is from the massive appreciation that we've all seen over the last couple of years. So, you have to kind of take that in context, right?
Yep.
I forgot what the third thing was.
The third thing is the amount of inventory, total inventory.
Increase. Come on. This is what happens every year.
It happens every year. Okay. So let's talk about this. Does inventory increase to a point where it busts through the average long term, and then it really has a negative effect on prices?
No, I don't think so, because first of all, where are you going to get the inventory from, right? Builders are starting to slow down and not start new communities.
Okay, down 16% in a month.
Right. So that inventory can't come from there. As far as home sellers selling their home, well, that's all fine and good, but they got to go somewhere. So if they're selling here and buying there, then that's a wash. So that's not really affecting those numbers.
Okay.
So, I mean, are we going to have an increase in inventory? Yeah, we always do this time of year. But is it going to be something dramatic? No.
I believe that the current increase in inventory is short term, because it's the people who looked out and said, I'm going to sell. I was going to sell in October. I'm going to sell now. and they're pulling forward listings they would have put on the market later. We don't know. This is anecdotal because we've had people call us saying, I was going to sell my house in the fall, but I'm listing it now. And we do have active listings.
We do.
Right? Yeah. So if you are that person and you are in Las Vegas and you have decided, hey, maybe I'm going to sell this house for whatever reason and you need help selling it in Las Vegas, just contact us because that's what we do. We help people list their house and sell it. Anywhere in the country, if you need an agent to help you sell a house, we have a startup that we're the founders of called Referral Cloud with this network of over 2,000 agents across the country who will help you with your home sale. If you are a potential buyer, Oana, what do you think about the prospects in the fall? To buy in the fall, given that there could potentially be a lot more choices of homes than we've seen maybe in the last 2 years.
Right. So I think it's a great idea to purchase homes in the fall because, like you said, there tends to be more choice.
Okay.
I think maybe sellers might be a little more flexible and not quite as demanding as far as making you waive your inspections or appraisal or anything like that. I think that they might be more reasonable that way, and that's a good thing. I think it might be a more win-win situation rather than feeling that it's a one-sided transaction.
Yeah, the real estate market has been a one-sided transaction for most of the last 2 years. It's been a super strong seller's market. The strongest seller's market we have ever seen, and this includes the 2004-2005. We had less homes on the market in the last couple years than we were having in 2005, but the city was a third smaller. So this has been the hottest market we've ever seen. We've never said home prices would keep going up at 20% a year. We don't believe that's feasible. We don't believe that's sustainable. We also don't believe that there is impending doom coming, despite what you may have read on the news, which is, of course, as you know, is not always super positive. And most of those articles, honestly, if you read them, any negative, super negative article, once you read through it, you'll find in there literally where they counteract themselves. The funniest one where it says rent decline, and then it said rents only, instead of rents going up 4%, we're going up 2%. So it was a decline, because the amount rent was going up was going to go down by 4%. And this was in a month.
Right.
Like rents were going up 4% a month. They're only going up 2%. So it's a decline, right? So you got to be careful sometimes. If you want to know great information about real estate, or it's a hobby for you, or you want to go to a channel where people are just going to be honest with you, and this is the one. This is it. Yep.
Look, we don't have any hidden agenda. We're very straightforward. We love your comments. We appreciate them. Please subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.